Today's program is brought to you by pennystockprofessor.com. For all the best OTCBB stock picks, sign up at pennystockprofessor.com.
Thank you for tuning in to another TBC Daily News Update. I'm Brandon Vincent.
And I'm Angelina Soriano.
Emerging market stocks and oil slid while the pound rose on evidence that central banks are preparing to scale back emergency support for economic growth. U.S. equities gained with better than forecast profit at Kraft Foods Incorporated, and analyst upgrades lifted consumer and drug companies. The MSCI Emerging Markets Index slipped 0.8%, and the Shanghai Composite Index lost 3.1%, the most in 7 weeks. The S&P 500 Index climbed 0.2%, while Google Incorporated lost 1.5% after saying that it may exit China. Crude oil declined as much as 1.4%, and the price of oil fell as low as $79.63 a barrel. Corn plunged for a two-month low of 5% at $3.73 a bushel. The pound strengthened against 15 of its 16 major counterparts, and government bonds slid, with the 10-year Treasury note yield rising 3 basis points. The U.S. rate should rise as the economy recovers. Yesterday, China raised the proportion of deposit banks that it must set aside as reserves, a move that may be a herald an interest rate increase. The S&P 500 rebounded after dropping yesterday, the most in a month. Gains were limited at Google after it fell 1.5% after the owner of the most popular search engine said it may shut down its Chinese website, down to a highly sophisticated cyber attack aimed at email accounts of human rights activists.
Merck & Company Incorporation shares rose 1.6% to $38.14 in pre-market trade on Wednesday after Credit Suisse boosted its rating on the drug maker to outperform from neutral.
I'm Kathy Hill, and I founded Tax Tiger to help people just like you with IRS problems.
We lost our business in this recession and owed the IRS $61,000. We hired a well-known company we saw on TV but lost our money with no results.
Thankfully, we found Tax Tiger, who negotiated a low settlement of $260.
Tax Tiger gave us our lives back.
The experts at Tax Tiger are so caring and professional, we highly recommend them.
Call us now for a free consultation and let the experts at Tax Tiger give you a good night's sleep.
TriQuint Semiconductor Incorporation shares rose 2.2% to $5.95 in pre-market trade Wednesday after the company issued preliminary fourth quarter results.
President Barack Obama will announce his intention to impose a fee on more than 20 of the country's largest banks and financial institutions to help recoup taxpayer bailout money and trim the federal budget deficit. The fees, expected to spread over as many as 10 years, will be based on the leverage or amount of liability each firm has. Obama will outline his proposal to raise as much as $120 billion at the White House tomorrow. The final cost of the fees will be based on the total losses from the Troubled Asset Relief Program, which administration officials expect to drop from the current Treasury estimate of $120 billion. The White House declined to provide a list of banks that will be targeted. The move may have bigger political than fiscal impact. By including it in the budget message that he will send to Congress next month, the president is tapping into public anger over the bailouts of financial and auto industries, executive bonuses, as well as the national deficit. Investors are more bearish on treasuries than they have been in 2 years as the reliance on government debt to revive economic growth weighs on sovereign issues. Yields on the benchmark U.S. 10-year note will rise over the next 6 months. The 5,437 respondents from New York to Tokyo to Paris were optimistic on the outlook for the global economy for a 6th consecutive month, pushing the index, which began in November of 2007, into a record high. Treasury yields will rise for a 2nd consecutive year as U.S. debt sales climb above $2 trillion and the Federal Reserve unwinds stimulus programs, according to the 18 primary dealers that trade with the central bank.
Kazuo Inamori, the founder of electronics maker Kyocera Corporation, agreed on Wednesday to become the new chief executive of Japan Airlines as the carrier's shares plunged ahead of its expected bankruptcy. Japan Airlines is likely to file for bankruptcy as early as next week as part of a broader restructuring aimed at reducing debts, slashing about 13,000 jobs and cutting dozens of unprofitable routes. With $16 billion in debts, JAL's bankruptcy would be the 6th largest in Japan's history. Inamori, the 77-year-old honorary chairman of Kyocera, is also an ordained Buddhist priest and will replace Haruko Nishimatsu, who has indicated he would resign as part of the restructuring overseen by a government-backed fund. Founded in 1959 as a ceramics company, Kyocera has grown into one of Japan's most profitable technology firms. Japan Airlines shares tumbled by their daily limit of 30 yen to 7 yen, leaving Asia's largest carrier by revenue with a market value of $208 million. More than 820 million JAL shares changed hands, accounting for 1/4 of all volume on the Tokyo Exchange. The Enterprise Turnaround Initiative Corporation of Japan plans to put about $3.3 billion in fresh capital into JAL, providing it file for bankruptcy, and its banks forgive about 350 billion yen in debts. Debt holders will also suffer. JAL has 67.2 billion yen in outstanding bonds, only about 20% of which will likely be recoverable in a court-led restructuring, according to an estimate by UBS Securities.
Today's top 10 volume trading stocks as of noon are as followed. Zivotech Incorporated, ZVTK, with 115 million shares. Camelot Entertainment Group Incorporated, CMGR, with 70 million shares. Cord Blood America Incorporated, CBAI, with 62 million shares. Unico Incorporated, UNCO, with 48 million shares. Neo Media Technologies Incorporated, NEOM, with 42 million shares. Metafile International Incorporated, MDFI, with 39 million shares. Green Energy Live Incorporated, GELV, with 20 million shares. Medical Care Technologies Incorporated, MDCE, with 19 million shares. IDO Securities Incorporated, IDOI, with 15 million shares. And Cyberlux Corporation, CYBL, with 14 million shares. And now for today's green news. January 1st, 2010 might have been Hangover Recovery Day for many people, but in the Australian state of New South Wales, it was commencement day for the new solar bonus scheme. Under the New South Wales government program, residential owners of grid-connected solar photovoltaic systems up to 10 kilowatt capacity will be paid a gross feed-in tariff. For every kilowatt hour their system feeds into the state power grid, they'll score a 60-cent bonus. This is the most generous FIT scheme in Australia and is planned to run for a minimum of 7 years. This should allow most households not only to pay off their solar or wind power investment, but also to become renewable energy farmers. The NSW government's calculations, those with an installed array of 1.5 kilowatts should export 2,500 kilowatt hours of energy to the grid in a typical year. In return, they are likely to receive a credit of around 1,500 Australian dollars each year through the solar bonus scheme. Other Australian states and territories have feed-in tariffs as well, though none of them are as generous as New South Wales. The next best is the ACT, where 50 cents is offered over 20 years as a gross fit. The federal government is a strong contributor to the viability of the residential solar photovoltaics, if they who funded the earlier rebate scheme, and now fund the solar credit scheme, whereby those who install small-style solar, wind, or hydro generation power systems are allocated a sliding scale of renewable energy credits.
Thank you for tuning in to another TBC Daily News Update. I'm Brandon Vincent.
And I'm Angelina Soriano.